Can you put it back on the other screen, Jack? Yeah, how do I do that? Just click on the lead. Yeah, there you go. Hit swap. Hit the top one. There you go. Okay, cool. So thanks everybody for coming. If you haven't already, please use this QR code. We can put it at the end of the presentation too. You can go to the next slide. So, so if you guys are here from Sharpe or Origin, thank you for coming. I'm from Northeastern Blockchain Club. I'm the co-president, and these are some of our socials. We usually have events every Monday from 6 to 7. They're also hybrid, so if you can't make it in person, you can come online. We just launched our research initiative, so if you're interested in research, talk to me after. We have teams of developers and also business students who are kind of pairing up and hoping to launch either governance or some kind of NFT project or adapt. So that's what we have going on. If you're interested in getting more involved further than just the speaker events, then talk to me after. And then I think, my bad, next slide. NEU Sharpe. You want to play the video or no?
Yeah. Is it possible to play the video?
I'll do the sounds. It'll work. Can you just talk about it? The sound's not going to work. Is that okay? Do you want to just talk about it? I can't. The sound.
Oh yeah, sure. I can just introduce Sharpe. So Sharpe is basically a graduate student-led fintech initiative at Northeastern, and Sharpe's mission is to enable graduate students at Northeastern to learn more about fintech, explore career opportunities, and develop specific technical skill sets in a diverse range of related topics such as blockchain, payment services, quantitative finance, and more. And we host speaker events with faculty and professionals from the industry. And we conduct technical workshops and host networking events to provide members with ample opportunities to delve deeper into this exciting field. And membership to join Sharpe is free and it's open to all active graduate students. And make sure to scan that barcode and that'll lead you to all of our socials and our website where you can sign up for our monthly newsletters and to keep up to date with all of our upcoming events. Thank you.
Hey everyone, I'm Dylan. I'm the director of Origin. So Origin's part of Mosaic. We are the deep tech sort of entrepreneurship club. So our idea is to focus on sciences that have high disruption potential, but also high R&D costs. So stuff like quantum computing. Last night we actually had a tech talk, someone who does quantum computing at IBM. So we do different tech talks in different emerging fields like that to get people interested in the sciences, blockchain as well. We also have just sort of community events where you can meet other people interested in deep tech, sort of discuss the ethics and morals of deep tech ventures. We had a couple of those food for thought events. And also we have innovation sessions where we're partnering with IDEA. So if you actually want to start a deep tech company, we can help you through the ready stage, figuring out going from an interest in science to an actual business concept where you can move directly into the set stage. So yeah, our link tree is there. Also we have our Instagram. At the link tree, you can go to our website where you can just sign up for our newsletter. It tells you about all the events every week. Also, we talked about it on our Instagram page too. So if you want to join, we'd love to see some people there who are interested in deep tech.
I can stop sharing. Do you want to pin Osho to the screen? Yeah. Cool. All right, we'll make the transition over. Osho, thank you again for being here. I haven't seen you in a few months now.
Yeah.
Yeah, so Osho is from dClimate's and Arbol. dClimate's is the world's first decentralized marketplace for climate data, forecasts, and models. I'll let you lead it off, Osho. I just want to give a brief introduction and where you got to and how you got to where you are today.
Yeah, for sure. Thanks for having me, guys. Excited to talk to everyone today about this interesting intersection of climate change and decentralized technologies. So I was one of the founders of Arbol. It's what's called a parametric insurance company. And so parametric insurance is this idea of having insurance be data driven as opposed to having a long claims process or anything like that. You basically track a data feed, and if certain data events occur representing on the ground problems, your client gets paid out. So what we did was we started doing that with climate related events. And these aren't necessarily long-term things. When we think about climate change and its impact on businesses and communities, we tend to think of more long-term impacts. Something like sea levels rising and stuff like that. But there's much more immediate problems, right? Like storms, heat waves, that kind of stuff. So those are the problems that Arbol focuses on. So a farming company, a leisure company, an event, or a power plant, those are generally our target clients and the kind of clients that like buying our coverage. What they'll do is they'll come to us with a problem. In the case of a power plant, it might be something like we're worried about a heat wave this summer because when there's a heat wave, power plants need to buy excess electricity. So it's very disruptive for their business. Likewise, you have the same problem on the frost side, but just for the sake of example, let's stick to the heat wave. And what we'll do is we'll structure them a product that basically says that, for every day that the temperature goes above like 99 degrees, you'll get paid some amount over this period of call it June to August, something like that. So that's a very simple structure. Now, in order to make that product, you need to have really accurate climate data. And in order to make that product useful for as many clients as possible, you need highly granular data that directly reflects the area that they're in. And that's basically what the Arbol platform does. This power plant owner or this farmer can draw a box around around their plant or around their farm and take out coverage for climate data that is very specific to the area that they're in. So, in order to do that, we needed to collect, clean, and process and make easily available tons and tons of climate data. And as we were building this, we realized that there are other kind of participants in this market that could make use of it as well. So other insurance companies that write parametric, construction companies that need to do site planning, stuff like that. Finding climate data is difficult. There's a lot of it, and a lot of it's freely available, but finding it is difficult because it's not well indexed. Working with it is hard because it's not well documented. And lastly, there's so much of it that, we're a tech company, we have the resources to kind of dig into all that. But if you consider a local government or a hobbyist even, these aren't necessarily the resources that they have on hand. So that's how we created dClimate. Now, in the spirit of we're all kind of very we're all very much blockchain enthusiasts. I almost called myself a crypto bro there. Apologies to myself and everyone. Yeah, so we had a vision originally about decentralizing insurance to begin with. And so we built everything in a decentralized manner, including our data infrastructure. And this actually ended up being a great stroke of luck because what we found working with climate data is that the decentralized infrastructure actually allows us to handle a lot of the nuances of climate data. So there's a very good technical reason to have it this way. One such nuance is revisions, right? So you may download daily precipitation data that's, given out for free from the US government, but they've been tracking this since the 1800s. So, maybe next year they come out with sensors that are more accurate. They have to go restate data. This is obviously a problem if you're working with this data on, monetary contracts and stuff. And so being able to store the revisions is important. Being able to have all these data sets available under one API so that everything is indexed and you can look up the type of data you need based on location and time period and type of variable even, like rainfall versus heat versus temperature versus humidity, that sort of stuff. Building all this infrastructure is very helpful there. There's, of course, also a philosophical argument to be made about, and this is true of almost all crypto projects when it comes to the question of why decentralized. There's the philosophical question of, who should be the steward or ownership or owner of this data. And for data like this, I think it belongs to all of us. It's the data about the world around us, and it's too important a subject to have any one corporation too involved in its interpretation and its processes. So we launched it as a decentralized network, and using the governance token, anyone can participate in the business aspect of that. So yeah, that's just a little background on what we do. I'm happy to go into more details.
Yeah, thank you for that great explanation. You hit a lot of my questions there. I guess, I guess like, why has no one else done this before? Like, what sparked you and your brothers ideas to start dClimate?
Yeah, so part of it is, I guess part of it is internal. So as we were building it, one of the areas that we kind of took a lot of inspiration from was what Amazon did with AWS. So with AWS, Amazon had built an internal framework for computing, and it realized that there's a lot of use for this outside of Amazon, and of course the business use case kind of followed from there. And so that's how AWS became its own sort of business unit within Amazon. And in the future, who knows, we might see AWS spun off as its own IPO. So the same idea was what spurred us to open up the infrastructure at dClimate. What we saw in the market currently was a lot of like old stalwarts that not only were not innovating, but were purposefully putting up barriers, as well as a lot of repeated work. So I'll cover both of those. In terms of repeated work, a really simple example would be, if a client comes to us for coverage against a rainfall deal, we're not the only company that they're coming to. They're shopping around, much like we would shop around for anything else. And so what you're basically considering is that like 5 or 6 different insurance companies are running through the same data to structure the same product and all building the same kind of processes around it. And that's just doesn't make a lot of sense. So we can standardize that. And it's important for us to standardize it internally, because when we build products, it makes it really easy to swap around data sets, try different combinations of variables in order to get the client the best price. And as we take on new data, it all fits within this like general framework. On the stalwart side, you do have companies in this space, such as Speedwell, RMS, and AccuWeather, and I'll cover each of those in a little bit more detail. So, Speedwell was a company that we interacted with when we first started Arbol. We were doing a deal with a weather station, or we were doing a deal that needed weather station data. Data is rich, but there's often a lot of gaps and things that you need to fill. They wanted to charge us almost $250,000 for basically running a linear regression on data and giving us a complete time series versus the one that had gaps in it. And we not only were not going to pay that, but we were a brand new startup. We couldn't afford to pay that. So we decided to work on this problem on our own. We're all math guys here, like we can figure this out. And we did. And that's what we're making available for free on dClimate. And we don't think that there's a need to charge that much using AI. And so RMS is another great example. And this isn't to put down any of the work that these teams are doing. They're doing fantastic work as well. RMS in particular does a lot of hurricane modeling. And they were recently bought by Moody's. Interestingly enough, they used to be owned by the Daily Mail, which is just really random, but something I recently found out. So that was cool to know. But RMS charges around $10 million a year, thereabouts. And so its only customers are insurance companies looking for models on how a hurricane path goes. We think that with AI, you can get 90% of that quality for a tenth, maybe 5% of that cost, right? And that opens up this avenue and these models to a lot more market participants. And the last part I wanted to address was AccuWeather. They've done some really cool work, and we have some AccuWeather people working here. But AccuWeather uses a lot of publicly available data, and they have lobbyists and other kind of people involved in the government. I believe like the former head of NOAA is like somewhat related to AccuWeather as like a former executive. And so there's been kind of more and more of these efforts to put up paywalls around this data and make it harder to get to. So by decentralizing it, by making it mostly free, making it publicly available, we think we're just generally doing something good for the space as a whole.
Thank you, Osho. So kind of like going away from dClimate and Arbol, what do you think are some of the biggest misconceptions people have about blockchain and the environment as a whole? I mean, we hear about Bitcoin, we hear about other mining applications. Is that the case for everything?
No, it's certainly not the case for everything. And I think there's a couple different ways of looking at it. You know, very directly, there was at the beginning of the summer, you know, Elon tweeting about the greenness or lack thereof of Bitcoin and the market reacting as such. And you see a lot of things following from that. Particularly China banning mining and various other kind of cryptocurrency businesses. You know, it makes a lot of sense. Running a proof of work system is very energy intensive. However, the way I look at it is, at the end of the day, if you're a Bitcoin miner, your profitability depends solely on your electricity costs, right? There's this interplay between hash rate and difficulty, and that moves as the market moves. But at the end of the day, your biggest cost and the cost that you need to pay for in fiat dollars, and the number one reason why miners usually have to sell coin, is that electricity cost. And so it is in your natural interest to go the green route or to go any route which is cheap electricity. Which is why you see a lot of BTC mining in Iceland and in areas where they can run it on renewables, a lot of interest in running it on solar power. Just the other day, Ted Cruz in Texas was suggesting that the natural gas that's normally flared off be repurposed for mining Bitcoin, and I don't think that's a bad idea at all. So all of that's well and good, but if we think about it in terms of a free market dynamic, a lot of what was happening in China, and I think China is a particularly interesting example here, is that miners were getting kind of sweetheart deals from local governments. So basically in areas where they're generating electricity from coal or anything like that as in non-renewable sources, they were still getting electricity for free because, you know, they probably have some deal that they cut or maybe some grandfathered price. And I did an analysis of this a couple of years ago at this point, slightly before the BTC halving. And you'll see that a lot of the mining market in China, particularly the older miners, because of their electricity costs, they don't even have to update to the newest gen hardware because they're still profitable on hardware that's, you know, 6-7 years old and maybe 2 or 3 generations behind. So that's another thing to keep in mind, is that when Bitmain or any other company comes out with BTC miners, all they're trying to do is improve the hash rate per kilowatt hour. It's the biggest unit of improvement that you can look for. And so it throws off that dynamic when people are getting electricity for free and aren't upgrading their equipment. I would liken it to, you know, everyone driving electric cars, but, you know, you get to drive a gasoline car for free because you don't have to pay for gas. It's just not really fair, and it throws off the market. And so I think what China did there with banning mining, while they didn't do it for that purpose, is ultimately a good for the market. It decentralizes hash rate and it improves the use of renewable resources. And it also brings a lot more attention to this. Now, it's been interesting to see that over the past month or so, more and more news has come out of China that there are provinces that are facing electricity shortcuts, and this is impacting manufacturing facilities of all sorts, and they have to scale down production. So I believe there are some larger forces at play, and BTC just happened to be in the scopes there. So on the flip side, you have something like Ethereum moving to proof of stake. Now it's very important to remember that proof of stake is a good and energy efficient process. However, it is not as secure, and it is not as it's just not as strong as proof of work is. So you do give up some of the certainty of proof of work, which just comes from the brute force nature of it. by switching to staking. But once you're in the staking land, you're not running miners. It's basically just running servers. And the last part I would like to kind of bring up is I think crypto in particular gets an unfair share of press on its energy usage. We don't talk about how much electricity us all collectively using Zoom or collectively binging Netflix results in, or let alone shipping and all that. I'm an Amazon Prime customer. I can order something and have a box the next day, and that's great. And I paid nothing for delivery, but that doesn't mean that it was a free delivery. It actually has a ton of environmental cost in it as well. So I think it's a bit, unfair to just pick out one industry, but yeah, that's how it goes.
Yeah, I definitely like those examples about Netflix. You definitely got a lot of head nodding in the room. Kind of going back to dClimate focus, what kind of hardware innovation is most pivotal to improve climate data collection? I know we're not talking about the US here, but mostly in other countries.
Yeah. So climate data has kind of two main problems that I think about. One is access, and then the other is coverage. So earlier I kind of addressed the access points by creating this easy to use API and making it usable by many different types of market participants. We help solve that problem. The next part is coverage, which is a little more interesting, because what I found out in the process of building this is that in the US we have fairly good coverage from weather stations and from satellites and things like that. And for the most part, every airport has a weather station. So whether you're looking for data in Texas or New York City, like you can usually find something. However, the rest of the world doesn't have that same level of coverage. One of our very first deals that we did at Arbol was for a Cambodian co-op, and they wanted to use weather station data, but the nearest weather station was in the northern side of the country, and they were based in the south. And that's something like the equivalent of trying to hedge against Boston's like weather risk by using New York data, right? Like it's just not all that useful. Satellite and what's called gridded data has been particularly helpful in these areas. However, it also has its own shortcomings. I was recently in Colombia meeting with coffee growers there, and we got to tour a lot of these coffee fields. And one of the issues is when you look at these coffee fields, there's a lot of changes in elevation and a lot of cloud cover because it's up in the mountains. So if you use something like satellite data, you won't get all that much information, and you'll get a lot of misreadings. You won't get information because of the cloud cover, and you'll get misreadings because of the changes in elevation. It's still workable, but it's not as high quality as having a station on the ground. So what we're currently working on is basically an incentive kind of structure that allows people to run small handheld weather stations or larger and get compensated for delivering hyperlocal weather data. So for any of you that are interested in something like Helium network, think of it like Helium network, except you're collecting local weather data. So we believe we can solve the coverage problem that way. We're working on the sensors, and we have some prototypes, and in the meanwhile we continue to use a lot of AI to blend data sets together to get coverage for areas that don't have coverage currently.
Sounds good. Can you give a brief introduction to Helium, just like less than a minute?
Yeah. For anyone that doesn't know, Helium's this really interesting network that basically wants to create a decentralized internet, and so anyone can buy a Helium miner, or they used to be able to. They're always sold out now. Anyone can buy a Helium miner, and all you do is plug it into the wall, set it up on your Wi-Fi, and it starts essentially running the network. And in return, you earn HNT tokens, which can be traded on exchanges, and they've done quite well. And the HNT tokens are used to basically transmit bandwidth over the network. So similar idea would be, you get this box, and this is a cool thing that like was also unfamiliar to me. When I heard the word weather station, I always pictured kind of like this big thing at an airport. and tons of weather balloons around, stuff like that. But you can have something that's like as small as like the palm of your hand or like the size of a smartphone. So you could take something like that and stick it outside your window, collect really local climate data, and get paid a little bit to do that. So that's something that we're working on. There's a couple problems there. One is the hardware side. That's actually the easier side to solve. There's a lot of solutions and a lot of good chipsets and sensor sets that work on this. The harder side is determining like a token-based incentive structure. So maybe it's easier to just like pay people US dollar to do it versus the way Helium does it. So a little of that stuff is up in the air, but the general goal is to solve the coverage problem.
Thank you. Yeah, I actually have a Helium miner running in my room, so it reminded me to go check, see how much Helium I have later tonight. So going back to dClimate's like cost structure, what's the differences in cost for like data sets and for companies to buy like weather data on dClimate versus going to AccuWeather or some other weather provider?
Yeah. So right now the cost structure is great because we have everything available for free. And so, with that includes the derived data sets. So that Speedwell example I gave earlier, someone can come to dClimate and get that data for free. With dClimate, even though we're decentralized, our view is that blockchain is a great background technology. So similar to how we're doing this call, there's tons of cloud servers running, but the fact that it's running on cloud and all that isn't shoved in your face, and that's something that I think is important for mainstream adoption. As much as I love DeFi and a lot of these apps, and I enjoy that more like hacker man aspect of it, the technology, in order to get more mainstream adoption, doesn't need to be that in your face for most participants. So what we're building is a very like clean, easy to use UI, somewhat inspired by iTunes, to further this idea of indexing and organizing the world's climate data, making it searchable. All these transactions will be done in fiat or stablecoin based on the client's choice. And so they will never need to interact with the token, and the token only represents a governance token. Now, on the flip side, any governance token holder gets a share of the network revenues. So that's always an upside. And at least from where I sit, and there's a lot of discussions around this, but at least from where I sit, I like the idea of keeping the data available for free for as long as possible, especially as we start building our own weather data network to kind of rival something like NOAA's by using those little sensors that I was talking about earlier. Because in my previous life, I used to work on Wall Street. Specifically, I was focusing on alternative data, which is essentially finding all sorts of exhaust data and figuring out how people are interacting with businesses and how much money they're spending at businesses. And what I saw there in various capacities is that monetizing data is very tough. A lot of people are not inclined to pay for data. However, people are inclined to pay for analytics and for nice tools that help them analyze the data. And so that's where we feel, we can spur network revenue. So we've built a variety of apps, and we're constantly building stuff on top of it to help very specific industries. dClimate this year alone has helped underwrite about $200 million of insurance coverage. And it's only been around like 6 months or so. So we will generate revenue that way. And if that means I can keep the data free for longer, I think that's the right approach.
Very cool. Yeah, so kind of like building off of that, I know you guys are building lots of applications for dClimate. What are your favorite use cases that you haven't seen or that you're currently building on top of dClimate?
Yeah. So there's a couple that come to mind. So one that we built, this was specifically for the construction industry. One of the benefits that we get as being, kind of built out of Arbol is all the industrial contacts there. And so unlike a traditional kind of blockchain startup, we luckily have a foothold on the market and a very different perception from potential clients and users as more of a industrial tool. And so we built an application that essentially helps construction managers manage their weather risk on their work sites. And essentially the problem boils down to this. If you're a construction manager and let's say you're building a skyscraper in New York City, and you know you're going to build from, or let's say Boston, you're building a skyscraper in Boston, and you're going to build from November through March, something like that. Today, if I were to ask you how many days of work would you lose because of bad weather, and that's a mix of, you know, people can't work when it's snowing, and local ordinances that say, you know, if it's this cold, you have to turn off your work site, all that stuff. Today, if I were to ask you that question, the only kind of solution for this is the worksite app that we made. What we found out, and this was mind-boggling to me, what we found out is that before we made this app, the way construction managers were solving that problem was Googling around. You'd Google, like, you know, December weather Boston, and then try to look for a chart for the past like 10 years and kind of guess at, you know, what the impact is. So we have a platform app that allows us to show that information really easily. They are able to set thresholds, they're able to see forecasts, and we're only going to keep improving on it. And this was requested by one of the largest construction companies in the world, so we think that there's pretty good scope for adoption. But you know, this same tool can be reoriented to work for event planning. It can be reoriented for trip planning. I used it myself as like a off-label use to, you know, figure out where I was going to go on vacation a couple months back, because everywhere I wanted to go was raining. So I kind of did like a reverse lookup using this thing. So it's like, you know, that gave me an idea for a product as well. So that's something cool. Another thing I like is that, like, weather forecasting is a really tough problem of all sorts, but specifically anything beyond 2 weeks out is extremely difficult to forecast. And then on top of that, you know, forecasting hurricane paths, tropical storm paths is also very tough. So we're developing a few games, and we're doing this more as like a showcase of what you can do with climate data, and hoping that others kind of jump on this platform and build more on it. But the idea behind the games is that, you know, one of them is called like Storm Broker, and basically you play it and it's like Monopoly, except your houses can get like destroyed by hurricanes, and you lose money. That's all using historical data. If I start using live data, then this becomes a really interesting use case for gamifying forecasting, which, you know, we've seen over the past year that gamifying things anywhere from, like, you know, investing to you know, something like Duolingo, where you're gamifying like learning languages, can have really powerful effects. So we thought, you know, why not try to find a way to gamify weather forecasting and see what people come up with.
Very cool. If anyone has any questions, feel free to raise your hand too. Anytime. Kind of going to the next question, more around like carbon credits and double counting. This was super popular in our RSDP questions. Does dClimate have any future plans to interact with that sort of thing, or are you guys looking to kind of like stop the double counting?
Yeah. So, you know, the carbon market is super interesting. It's a lot of press these days, and it's not something we had actually looked at a bunch when we started building this. One way or another, you know, we got approached by an individual who was selling a ton of carbon credits, and we decided to take a look. And what we uncovered was that, you know, this market is hardly a market at all, right? So you'll see these headlines that this and that company bought carbon credits, and like it's mostly all fake. So for one thing, if I have like a forest, let's say, if I have a forest and you're Apple and you want to offset your carbon footprint, you can buy carbon credits off of me. If you're Facebook, you can come to me and I can sell you those same carbon credits. I can use those carbon credits to offset my own carbon footprint. And when you think about that, that makes absolutely no sense. You know, how are three different entities offsetting their carbon footprint using the same forest? Then you have a separate problem, which is these companies come and buy forests, and, you know, you sign a 20-year deal that this is my forest and it's offsetting my my carbon footprint. But what happens if next year the forest burns down, right? That's not really updated. So what we noticed was this market basically lacks a lot of accountability and accounting in general, and a lot of that is because it's not data driven. The current players in that market do things in a very like qualitative way. They will send people to climb trees to measure the difference in growth and use that to estimate how much additional carbon can be sequestered in this area. And we're, you know, every day we're discovering new articles that show that, you know, soil or grass or this type of tree does not sequester as much carbon as we thought it did, and this and that. So we decided that we would take a very data-driven approach to it. It's not easy, but it's something that that we're building. So in the next few weeks, dClimate will have a bunch of carbon data sets uploaded to it. We'll be coming out with our carbon product, and for us, the way we're going to approach this is we are very fortunate to have two extremely experienced advisors in the space sitting on our board. One was the former special envoy to Africa, and so that's where we're basically starting this effort, just because there is a lot of carbon sequestration that can be done in Africa, and so that's how we get the supply side of the market. The other was in private equity and agroforestry for about 20 plus years, so he understands the demand side, and so when we have those two pieces already ready, now it's just a matter of building product, and we're going through our first or second revision where we're using tons of satellite data to both monitor carbon sequestration and carbon emissions. And it's a very interesting math problem as well. So I find that part pretty cool. But yeah, that's essentially how we're trying to approach this market.
Very cool.
I think we have some questions in the chat.
Yeah. Anyone have questions in the room? Yeah, no questions in the room. Okay, I'll go to the chat. Okay, so this one, the first one, I already kind of know the answer, but how much more green, so instead of having a transaction in fiat and then a transaction in blockchain, what's kind of the energy differences? I know it's a little bit harder to track the fiat just because it goes to the bank.
Yeah, it's tough, and I don't have a good answer for that. You know, when we consider our traditional banking system, one of the problems, or I guess one of the areas where we give it some leeway that we don't give cryptocurrency, is that we don't measure the computer usage of a JP Morgan Chase, or we don't measure the carbon footprint of Bank of America. I believe that if we were to do that and compare that to the footprint of something like the BTC blockchain, I think, you know, we would be pleasantly surprised at how little Bitcoin uses. The energy usage is just much more upfront. Then we have to ask the question of what is the energy being used for? In the case of Bitcoin, energy is being used to secure the network, right? And so you'll see these comments, you know, like from Jamie Dimon and such, that say Bitcoin doesn't have any value, or there's no intrinsic value. That's the phrase that gets thrown around the most. And intrinsic value is a very misguided concept, because very few things in life have intrinsic value. And more importantly, measuring intrinsic value is quite tough. So the way I look at Bitcoin in terms of intrinsic value is it is backed by the computing power of millions of computers. And this energy usage is specifically being used to secure the network and ensure that a transaction is done in the most secure way possible. I've seen arguments that, you know, not all transactions need to be this secure and all that. So be it. However, it doesn't take away the fact that that is what the energy usage is going for. In the case of the traditional banking system, the energy usage, it's unclear what it's going for, right? It's unclear what the carbon footprint of something like JP Morgan Chase is, and how much of that is being used to verify transactions and secure accounts versus, you know, this and that executive being on a private jet. So that's just kind of how I think about it. Unfortunately, I don't have any hard numbers to talk about here.
Thank you. Another question from the chat is, when do you think governments will migrate to blockchain platforms or start to control issues of carbon credits or supply chain issues?
Yeah, I think it's going to be sooner rather than later. You know, just looking back at the growth of blockchain tech, I would say the narratives that caught on very quickly with like institutional investors and institutional users were supply chain tracing and even NFTs, right? NFTs fall into the supply chain tracing, so I look at it as like a whole thing. What blockchain does is really good for that. And so you can build a supply chain tracing system that can be used for carbon credits, and then use a separate ledger that can be used to trace imports and exports to ensure provenance. So I actually think it's coming sooner rather than later, because it's actually an easier problem to solve using a ledger than it is to solve using normal technology or more traditional methods.
Very cool. Thank you. And kind of going in like your personal opinion, kind of going away from dClimate, what industries or products do you see like most ripe to be disrupted by blockchain, or what are your favorite new projects that you kind of seen come up to stream?
Yeah, so I think there's a lot of areas where blockchain is going to seep in. I, like many other people in the space, am very excited by the proliferation of NFTs and what they mean. They are the very first blockchain native instrument. And what I mean by that is, without blockchain, you couldn't have an NFT. And this is a very interesting place in the evolution of blockchain, which is, when I look at the evolution of internet as a whole, social media was one of the very first kind of internet specific products, which is to say, without this large kind of broadband system, social media is very tough, if not impossible to do. And so looking back at how that tech grew over time, and standing in this moment where NFTs are just becoming popular, it's cool. I think there's a lot of cool use cases here. In fact, it's like kind of funny aside. I mentioned earlier that our goal was to decentralize insurance. Our very first product in 2018 was an NFT-based insurance product where you could buy an NFT that represents a tile of land where your farm is or your power plant is, and it holds all the data and it holds your policy. Legally, you cannot sell that as insurance, which is why we didn't sell it. But it was still cool to like work with these ERC 721s and create this infrastructure. And in fact, we're reusing a lot of that infrastructure for the carbon product I just mentioned. So one way or another, it was helpful to build. And so I see that kind of application in finance getting more and more interesting. You could NFT a portfolio and sell portfolios amongst companies. Like, there's all sorts of cool use cases there. When I think about blockchain as a whole, though, from a tech level, I think it will become a de facto standard. So one thing that like people forget is, so I graduated in like 2012 from college, and back then, cloud was not native. It was not the thing you built on. You built mostly on-prem, particularly for data science applications. You built everything on premises. And the idea of putting your internal data, your very important company internal data, onto a cloud, away from your security systems and all that, and giving Amazon or whatever custody over it, was seen as very strange and like unexpected. It was only over time, when cloud became cheaper and more powerful than keeping data in-house, that it became widely adopted. So now very few companies keep data on premises, and those that do are often doing some very intense like AI using GPUs and stuff like that. And even that's starting to shift the way of cloud. And so right now we're in this kind of interesting middle ground where there's always this question of like, when do you centralize versus when do you decentralize? And decentralization generally costs more, and you get benefits in terms of robustness and security. I think as we go forward, that question basically disappears, and when decentralization becomes even cheaper, like some of what Ethereum is doing with layer 2 solutions, and what ETH 2.0 is bringing to the table, if we can make decentralization cheap, as cheap as cloud, if not cheaper, and still offer all the security benefits and the robustness, I think it'll become the standard. And I think looking back at this past, 2 years almost now of post-COVID life, if you will, one thing that we have really seen on a global level is that our infrastructure, regardless of country and regardless of industry, has repeatedly sacrificed robustness for throughput, for speed. And we have seen the failings of that over and over again. One such example is the Texas cold spike that happened last year around February, and tons of people were left without power and heat. That's an electrical grid that was built for efficiency of speed, but it was not built to handle a fluctuation in temperature. And so the same idea of, not having robust infrastructure translates into so many different industries that I think this has been a very telling event that we need to rethink the way we build.
Very cool. We have a question from the crowd here. Go ahead.
Hi, I was wondering, do you think that it's possible to refine the climate data down to like day-to-day uses, such as like calculating car insurance based on weather conditions, or is it too like long-term focus?
No, that's a great question. So we can get real-time data, and I'll touch on that in a second. But let's just take the kind of example that you brought up of like car insurance. I like that because it's a very it's not something I've necessarily thought about, but it's a very straightforward thing, which is when there's bad weather, there's going to be more auto accidents, right? That feels like a very intuitive relationship. We actually have data sets that can get data by the hour. And as we put up these sensors, you can start getting them by the minute. I actually spoke to a company, they're based out of Italy. They build these little weather stations that are the size of a smartphone. You put a SIM card in them and they have magnets all on the underside. So you can stick them onto a car, and that's what they're built for. And as you drive around, it records, basically in real time what's going on. Now, if you consider the auto insurance world, you do get discounts for having a dash cam and stuff like that. So why not get kind of a discount depending on the weather, because you're less likely to get in some sort of accident. I could see it working. I think it's tough, but if you have real-time data, you can certainly build a product like that. And that's what I wanted to stress initially, which is like a lot of this climate data work doesn't need to just be long-term stuff. And the fun part with the games is that a lot of the climate data conversation or the climate change conversation is usually very somber. Thinking about climate doesn't always have to be such a serious thing. Like, we can have a little fun with climate data and like play some games too. So yeah, that's basically my thought process around it.
Thank you. Any other questions? Anybody? Okay. I think that's all the questions I had.
Actually, yeah, I've got a question. I'm not sure if this is the way to ask it, but like, so with insurance, I'm pretty sure the business model is like the insurance company, you pay the fee for the insurance, and then you receive a payout if a certain event happens. So It seems like insurance companies make money off of knowing the price to pay or the price to charge, such that like, on the whole, they make more money even though they have to pay out to some people. So I guess my question is like, with better data, I can see how that would help the customer of insurance companies because they could insure previously uninsurable events. But doesn't that almost kind of like hurt the insurance company's bottom line, because like they, rather than being able to like charge more, like the data is really clear as to like what should be charged, or like how do insurance companies still profit off of that transfer?
Yeah, that's a great question. So, yes, having more granular data is definitely beneficial for the client. It's also beneficial for the insurer because now you're isolating a risk. So, if I were to sell you coverage of Massachusetts rain versus just Boston rain, I've isolated my risk to just Boston. So that's one aspect of it. I'm really glad you bring this up because in traditional insurance, there's kind of a reason for this long claims process. There's a reason for a lot of the hurdles that you have to jump in order to get a payout. And, those aren't bugs of the system. Those are features. The insurance company doesn't want to pay you out if it doesn't have to. So when we started looking at crop insurance, when we first built this thing, what we found was that, they will run you through all sorts of like best farming practices, all sorts of things, like, did you use an older model tractor? They'll blame that for why you don't have a harvest, stuff like that. So by going parametric and going this data-driven route, we've already improved that. In our case, sorry, what's up?
Parametric and normal insurance.
Yeah, so normal insurance, you have to go through like a claims process, and there's like an adjuster that comes and checks out like what happened and makes an assessment and all that. In parametric, this contract exists between you and I that, and this is before the coverage even starts, we agree that, if it rains half an inch above the 10-year average where you live, then you'll get paid out. It's as simple as that. And if that event happens, you get paid. There's no questions asked. And actually on our platform, if you go through our platform, you'll be able to see like how many years you would have gotten paid out. If you can change around parameters to see what how your cost changes and all that. So where we can still profit is essentially through diversification of both geography and type of weather risk. So at Arbol, we manage about $1 billion to underwrite risk on our platform. So essentially think of it as almost 3 separate businesses. One is Arbol, the software platform, which aggregates these climate coverage risks and these climate coverage deals from all sorts of clients. There's dClimate, which took Arbol's data infrastructure and is now running its own decentralized network. Lastly, there's a fund that we run, which anytime a climate deal comes our way, when we first started, we would take that deal, package it with a lot of other deals, and go to reinsurers and try to basically get a broker fee. That's not a long-term sustainable business because the reinsurers know that they basically can overcharge you and that you're on the hook. So we raised a separate fund, and what that fund does is instead of taking it to reinsurers, we take that and we use an AI underwriter to price and model the risk and a full AI-driven risk management system. And so you get really interesting diversification this way because if I sell a little California heat risk and I buy a little Amsterdam heat risk and I sell a little Australia rain, all this stuff is very uncorrelated. And more importantly, it's uncorrelated to traditional markets because it doesn't matter what the Fed says about rates, weather is going to be weather, right? It doesn't matter what stocks are doing. It doesn't matter what bonds are doing, whether it's going to be weather. And so investors really like this kind of fund structure because we basically built this new asset class, and via our platform is one of the few ways to invest in it that's not solely catastrophe. And when I say catastrophe, that's a term used to refer to specifically like hurricanes, wildfire, earthquake, that kind of stuff. It's one of the few platforms that gets you access to, one of the only platforms that gets you access to this kind of stuff. So we basically make profits by diversifying that portfolio, much like you would if you were diversifying an equities portfolio versus just buying one stock, something like that. Does that help? Can I explain it?
Yeah, I didn't realize there was a third party involved. So there's the investors that are actually like funding the insurance platform, and like they can sort of buy packages of assets that are different than what you could traditionally buy.
So just as like a point of clarification, it's basically that like we run a separate fund. So when an investor invests in Arbol, they're funding the software platform and all the tech development and all that. When an investor buys governance tokens for dClimate, they want to participate in the network, that sort of stuff. And then there's a separate kind of group of investors, and these are basically the same types of pension funds, et cetera, that would put money into a hedge fund, like when a hedge fund gets started and they go out and raise funds. Those are the types of investors that put in money. So that's purely institutional money. Right now we work mostly with like Wall Street funds for stuff like that.
Okay, right, that makes sense.
Yeah, go ahead, Hudson.
So you guys mentioned that kind of brought this asset class out, but I know the CME does weather futures for a bunch of the major metro areas. Do you guys offer better liquidity, or what's your advantage compared to traditional CME weather futures?
Yeah, liquidity and granularity. The CME is based on some major cities. We can go down to anywhere and basically create an index. So we get much better coverage. I believe we have more liquidity. We actually participate in a lot of that CME stuff too. That's how we source a lot of our energy deals.
What do you exactly mean by participation in network governance? Like, is it related to mining kind of thing, decentralization, or is it something different?
No, it's a DAO structure. So governance varies project to project. In the case of dClimate, governance is fairly open. So we have it set up so that governance can set bounties. So let's say you are part of dClimate's governance and you really need data for call it Western Mass. You really need it for like an insurance program you're running. You can set a bounty that says, like I'll pay people to like collect data here. And then if I need data for South Sudan, I can do that as well. But then we can also vote on simple governance things like, I believe the the UI font should be changed. I'm going to propose a vote, and if enough people care and they want to vote, they get into it. So essentially, it's just the idea of a DAO, a DAO, a decentralized autonomous organization. It's the way I look at it is when you buy a traditional stock, like let's say you buy Amazon stock, you can participate in Amazon's like board member vote, and that's about it. That's all you really get as a shareholder in terms of company say. With a governance token, depending on how the network is built, and in our case, it's very open that way, you have as much say over what happens day to day at dClimate as I do, right? It really varies on how many tokens you have, but governance is super interesting. And I think DAO structures are extremely cool because you have this aligned incentive. We all want the network to succeed because we have a monetary incentive to do that. And we're all shareholders, if you will, of this network. And if you have fewer tokens than me, that's fine. You can write a really nice proposal and people can join your side and a vote can be done and implemented like right away. So I think if you're not super familiar with DAOs and on-chain governance, it's a great area to investigate because it's a very cool corporate structure.
Thanks, Osho. That's all we have time for today.
All right.
So, thank you.
Awesome. Okay. Great talking. And thanks again for making the time. And hit us up on Twitter or Discord. And like I said, it's an open network, so anyone who wants to participate and get involved is very much welcome to do so.
All right. Tell Bill I said hi. I'll see you later.
Yeah, we'll do. All right. See you. Bye.